Okay, so welcome back to part 3 of this week's market insights that we do, just to try and help you guys. Again here, it's just really, it's my personal views on sort of how I see things going at the moment. So let's just go through it. It's not too long this week. Okay, so the data was sort of fairly quiet to a degree. The market's a little bit volatile, lower volumes coming through, obviously because of the US taking the long holiday, 4 days from Thursday. So when we look at things, central bankers, pretty much nearly all of them at the moment are claiming a pause on rate hikes. And that, of course, is unless inflation turns higher again. Now, the likelihood of that is not too great at the moment, although things can change very quickly with what's going on geopolitically. But we are seeing sort of WTI close Friday just over $75. Gold finished strong though, over 2,000. The dollar was a bit weaker again, and stocks had another steady week. So geopolitically, when we sort of look at what's going on, Russia had a deluge of drones hitting Kiev. There was over 75 drones, so there was a bit of damage done there. Moving back onto sort of Israel Hamas, that pause, some of the hostages have been freed. Will there be more? Is this going to be sort of a de-escalation? I'm just not so sure. Okay, so then looking at Germany, their sort of the data that came out last week is showing that perhaps their economy is bottoming, but it's far from being a recovery. UK budget was taken pretty well. Yep, the government gave a few things, perhaps with an election next year in sight, but not too much. And of course, as usual, they give with one hand and they do tend to take a little bit back with the other hand. Moving on to the US now, next year we've got US elections, and I'm going to sort of just talk about that a little bit more later on, but all right, well, actually, why not cover it now? So it is election year, so for me, stocks, interest rates are going to be the key things. Obviously inflation, and we're going to see some PMIs, but I think because it's election year, that's usually a positive year for the economy, because the present government is always looking to sort of boost their ratings and attract the voters, and of course the best way for them to do that at the moment is by boosting the economy. However, most Americans, although on paper they're looking, or a lot of them are looking much better, more positive with their equity and household wealth, obviously that doesn't impact all levels of earnings and everybody in the country. Now, to a degree, I suppose, boosting the economy is one thing. Of course, on everybody's mind around the world, let alone in America, are all these higher prices and all this really strong inflation that we've experienced in the last couple of years. And I think this is going to sort of pose perhaps an interesting question. And that could come down to Powell, and group, of course. Would they rather deal with Biden or Trump if he is re-elected? If it's Biden, if they sort of favour the idea of Biden, then I think possibly we could see 2 rate cuts before the November election. Again, it's this is just purely my view, just looking ahead, and it's important that you do look ahead at all these sort of things because they're going to impact price. And of course, that's going to be data permitting. It's not as if they can just cut rates anyway, so they would have to hope that inflation was still being under control or even dropping lower. And of course, if Trump, and of course, you've got to remember that Powell's worked with both Biden and Trump in his years as chair for the Fed. Of course, he could delay those rate cuts. Now, that's sort of me being a little bit sort of thinking as a strategy. Obviously, you wouldn't expect the Fed chair to think like that, but I think of it as a trader. So, again, he doesn't make that decision on his own. So, whichever way that goes, and obviously that mix of members, those voting members, that's going to be on the back of their mind, sort of probably as we enter halfway through next year moving forward. But, I'm just throwing that out there because it's something that I suppose everybody has got a political view. It's just a matter of whether you let it perhaps sort of interfere with other views that you have, or ones that you should have based around the economy rather than politics. They're supposed to be neutral. So, as I say, it's just my sort of insight. I'm just throwing it out there to, because it's something that will be on my mind. But of course, maybe, the guys that run the Fed don't actually care. Maybe there's not much difference between them. Okay, so, that's sort of it for there. Inflation isn't really sort of moving any higher, especially with oil prices lower. But this OPEC Plus meeting that was pushed to this coming week, the fact is that it's been sort of delayed. For me, that shows a little bit of different opinions, shall we say. I would guess that the Saudis are perhaps willing or trying to get all the members to cut a little bit more, just so they can try and either keep the oil price steady or move it back up again. And I suppose that that would Russia could be the same there, but other members probably don't want to cut. They probably just want to get that sale. They need that revenue probably much more than the Saudis do. So that's going to be interesting to see the outcome of that this week. We're going to get some inflation data coming out, some more PMIs coming out. And of course, are we going to start to see an increase in demand as people do their festive shopping? Are we going to see companies trying to take advantage of any increase in demand and hike prices again? So just a reminder, NFP is not out this week. It's going to come out next Friday instead. And, will there be recessions again? I think for a lot it's sort of up in the air. I think the US is still going to get their soft landing. I'm more concerned about Europe. Certainly looking at Germany, it's not looking good. But again, technical or shallow, deep, short, long, all comes into mind, and again, that data is going to play a big part as we start to see that. But 2024 is definitely going to be an interesting year, and it's not just about the US elections. There's other elections next year as well, so that there's a lot going on in sort of the political areas as well as the geopolitical areas. Supply chains, thankfully, the wars that are going on don't seem to have really unsettled the markets in the way, especially commodity wise, for the moment. And again, I'm sure that OPEC Plus are disappointed to see oil prices where they are. And I'm sure they would have expected to see them higher just from their cuts, let alone sort of some of the political tension that there is around the world, or geopolitical tension. And of course, that unemployment rate still isn't really going up. I mean, you're seeing it creep slightly, but there's definitely not as much of an impact as I would have expected by now, just based on all these rate hikes. But then possibly, companies and the fact that they've increased their profit margins are leaving them with a little bit more leeway and willing to hold on. I suppose really the key sector for shedding jobs has been the banking sector. And yet when you look at their profits, it makes you wonder why. So anyway, that's my sort of macro outlook for this week. you know, I just like to throw things out there sometimes just to get you thinking, you know, because it's all right reacting to what's going on today, but you know, you've got to be thinking about what's going to happen in the future, because you know that should help to give you a bias on where you see the markets going in the future. And again, you know, if you can have those strong opinions, then you can trade things such as options, because you can have a longer term view. You don't have to micromanage the risk so much. And of course, we do lots of different courses on all aspects of trading and the fundamentals as well. So, you know, if you're not as strong as you should be, then, you know, maybe December's a great time to join one of our courses. Just reach out to us and we'll let you know what's available and give you some advice even. So that's pretty much it for this. Now in the final part, I will be doing some technical analysis. So we offer newsletters, we offer workshops, 1 week courses, our comprehensive masterclass that's really going to help you. You know, apart from gaining all that fundamental knowledge, you get to spend 20 trading sessions with me, practical sessions. So you know that's you know, I'm not saying I'm going to turn you into a massive trader in 20 sessions, but you know, getting that sort of feedback from me, that insight from me, is valuable. Now, other things that we offer are trader mentoring. We consult to companies on FX and commodity exposure. Of course, we provide a massive educational content to individuals, exchanges and brokers. If you feel underfunded, why not give the trading challenge a go and see if you can get that funded account. You know, maybe you're underfunded, maybe you don't want to risk your capital, which is quite understandable. And of course, one of our courses now includes a free attempt at the trading challenge. If you would like to find out more about anything, then contact us at info@symaxfintech.com or directly to me at chris.tubby@symax-int.com. Okay, so now we're going to go into the technical analysis section. So I hope you join us for part 4. As usual, we start with our disclaimer. So trading involves the potential risk of loss of capital. It's not suitable for everyone, although hopefully it is for you. When it comes to leverage, just be careful because you can lose substantially more than that initial investment. Everything we include in here is just purely for educational purposes. You know, we're not trying to provide you with advice, we're just trying to help you prepare, understand the markets better, to help you make better decisions. But of course, you know, if you are looking to invest or trade, that has to be your decision. And before you make that, you should consider your financial situation, your level of experience and your risk appetite. And of course, on your risk capital, you're prepared, but more importantly, can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before risking your capital.